Hello, everyone. My name is Tammatha Denyes, and I'd like to take this opportunity to thank you for coming and joining us at our webinar called Take Your Cash Flow by the Reins. Now, unfortunately, we actually hosted this last night, and this is a retake, but please bear with me. We will get through this entire webinar. So let's start. First of all, I want to thank you for joining us. As you are aware, this webinar is about cash flow and how it can make and or break your business. But not only that, we're going to give you some valuable tips that you can take away that you can apply towards your business to help free up some of your cash flow. But let's start by looking at some housekeeping. First of all participants are muted. This gives us the opportunity to actually get through this webinar in the time that we've allotted, and we can answer the questions at the end. Secondly, this webinar, even though I said it was recorded, it is now, is recorded and will be sent to all participants in the next 24 hours. Thirdly, there is a question and answer box available, and this is being monitored by Stephen McLeod from Intuit Canada, who will gladly answer any questions that you have. And lastly, let's take the time to enjoy this webinar. I hope you can take something away from it that you can apply to your business, and I look forward to doing this with you. And this is our agenda for this evening. We're going to do a minor introduction, which we have done. We've gotten to know each other a little bit, who's attended and who's here. We're going to spend a few minutes getting to know myself, your speaker. We're going to talk about what is cash flow and why it's important. And then I'm going to give you some tips and techniques that will help you generate cash flow within your business. Lastly, we're going to take some time for some questions, and then we're going to call this webinar done. So let's start with who I am. My name is Tammatha Denyes, and I am the owner of TD Accounting Services. We're physically located in Stirling, Ontario, but service customers across our vast nation and internationally. I am a certified professional bookkeeper with the Institute of Professional Bookkeepers of Canada, and I'm also on their board of directors. I am part of the Trainer Writer Network with Intuit Canada and a mentor for Futurepreneur. This year, I have been recognized as one of the top 100 pro advisors for 2018 in North America, and I consider myself a good golfer, a speaker, and a badass forward-thinking bookkeeper. That's not all. People consider me a financial coaching strategist for their small business, and we have just recently been announced as the 2018 runner-up for the Intuit Global Firm of the Future. We're very proud of that recognition. But let's look. What is cash flow? I'm going to start with this quote. Revenue is vanity, cash flow is sanity, but cash is king. And when you think about cash flow, think more in lines with your bank account. So for example, if you have more money coming in 30 days into your bank account, you have a positive cash flow when you look at the monies going out. But if the monies going out is larger than the monies coming in, you have the potential of being overdrawn. We know that, that's common sense. And then you're going to need to find monies to cover that overdraft. But is it possible to have profit and no cash? Absolutely. Happens all the time. So for example, you may have profitability, but all of your cash is tied up in your accounts receivable, people that owe you money. Does that happen? It happens more times than not. So most of this webinar is finding ways to get that money out of your accounts receivable or from the hands of people that owe you into your bank account where that money belongs. Cash flow is also defined as money flowing in and money flowing out of your business within 1 month. So this is something that we're actually going to be paying attention to. Our cycle is going to be a 30-day cycle because really we budget for a month. Our whole business is run on a monthly basis, just month after month, right? So why is cash flow important? One of the biggest reasons for business failure is lack of cash. Simple, lack of cash. It will shut you down faster than anything else. But cash flow is important for a number of different reasons. Not only does it keep our businesses successful and keeps them alive, it pays for future purchases inside of your business. So if you're a product-based industry, you need to purchase inventory, you need to purchase raw materials, and to have money to do so will allow you to stay in business. Now, what if you're a service-based business? You need to buy office supplies. You need to buy programs or applications to help you do the work that you do. No money, no purchases, no jobs, no business. Cash flow is important because it allows us to keep up with our debts. So as a new business, it wouldn't surprise me, or an existing business, that there's business loans out there, or we owe debts to others that we need to pay. We need to have the cash in the bank to pay those debts. And this is above and beyond our monthly regular bills. We also want to be able to grow our businesses. So growing our businesses, of course, is obviously something that we feel is important to us, or we wouldn't be in business today. Growing our business, we need money to do so. Cash flow, cash flow, cash flow. But the biggest thing for me is I need cash flow for the flexibility. If there's a great deal that's coming up and I'm a product-based business, I want to be able to go out and purchase that inventory that I want in my store because it came up on sale and I have the cash. Or perhaps there's something that I need to invest in my business, a new piece of machinery. I would like to have the cash available or the means to do so. Lastly, if I'm a service-based business and something were to happen in the building that I was in and I needed to fix it, now I have the cash available. This is why cash flow is important. It's all these different decisions that we need to make as business owners, and having it available eliminates and alleviates our minds. So now to the meat of this particular webinar. I want to give you 7 techniques and tips that you can take home and use in your business to help take that cash flow and make it more robust in your business. The first thing we're going to talk about, the first of the 7, is offering incentives. Well, what is an incentive? Why would you offer it? An incentive gives your customer an early payment discount. So for example, you may be in a service-based business and offer your customers, payment within 30 days, full payment within 30 days. But if you pay early, we'll say 20 days, I'm going to give you a 2% discount. So this allows your customer to save money immediately if they're willing to pay within those 20 days. That in itself, customers will jump up. When you think about it, who doesn't want to save $1? Most people do. But this gives them the incentive to do so. This fluffs up your bank account within that 30-day cycle so that you have that cash in the bank and it's not sitting in an account or in a spot where you can't access it, your accounts receivable. You, the vendor, the person who is selling these services, can set the terms for the discount. And it can be whatever you wish it to be. It could be pay your debt in full within 30 days. And perhaps I'm going to give you a 2% discount if you pay within 20. Perhaps instead it'll be 1% if you pay in 15 days. Either way, because you are the person who is setting the terms, you make those decisions as to how much the discount is actually going to be. As I alluded to, if people take advantage of this discounted incentive, you're going to have cash flow in your bank. And that's going to alleviate a lot of potential concerns. Being able to pay your bills, being able to pay your staff if you have teams or employees you need to pay. Not staying up late at night because you're wondering where you're going to get the next dollar to pay the rent at the end of the month. The one thing though that incentives do is it helps get those debts paid and the money into your coffers. The longer it takes to collect a debt, the better chance it is that you won't collect it at all. For every pro, there is a con when it comes to incentives. The one thing you need to do as a business owner is to sit down and see what type of discount you can actually offer. Can you absorb this discount? A 1 or 2% discount may not seem like a lot of money, But if your business operates on thin margins, these discounts can add up and cut further into your profits. Sitting down and looking at what you can afford to give away to get that money into the bank sooner is very critical. Taking the time, it's sitting down with professionals, other accountants, your bookkeeper, to sit down and analyze if this is not your strong suit. Bring in your other professionals in your business to help you make these decisions. You may get customers to agree to this discount and say, "What, this is amazing, I love this idea," but then they don't pay within the allotted time. And that does happen. It happens quite a bit. They will issue you a check on the 10th day, and you actually don't get it until the 15th day after. Does that mean they're entitled to the discount? Well, that's up to you. But if you do a face-to-face or human-to-human interaction and explain to them that you actually have to have the cash in your possession within the 10 days or the 15 days, whatever your discount is, then and only then will they get that discounted rate. Then there is no confusion. So taking the time, sitting down and explaining the actual deal will help your customer understand, and this confusion will be cleaned up. Discounting periods. So in certain industries, discounts are common. Let's look at construction. When I go to, say, Home Hardware or Lowe's, and I am a construction specialist, I build roofs or I frame houses, it's not uncommon to have, pay in 30 days or, get 2% off in 20, I'm guessing at those discounts. Because I'm doing volume purchasing, I definitely want to have that 2%. There's no question. So in this particular industry, they have figured out what is the norm. This is something that you need to do in your personal industry. So construction, maybe it's 2% in 20. In my industry, in accounting and professional bookkeeping, it is 1 to 2% in 15 days. And then the balance in 30 if I choose to issue a discount. I've seen in certain circumstances where if you pay me within a set period of time, I will give you a discounted rate, but outside of that, I will allow you to spread the payment over a period of time for a fee. Discount terms should be in writing though. So when you sit down with your customer and you explain to them, this is what our discount entails, and this is how we collect the funds from this discount for you to take advantage of it, putting it in writing absolutely eliminates confusion. Explaining it to them helps even more, but having it in writing is going to help you significantly. The second tip I'm going to give you is to diversify your payment options. So what does that entail? Offering diversity, different methods of payment is going to reduce the payment barriers, and that helps your customer. It also helps you because, again, the money is getting to you faster. And there's so many different ways for you to offer payment options. You can offer debit, you can offer credit, and with all of these newfangled wrist toys that we have, you can offer Apple Pay or Google. Google's got a pay plan now too. Not only that, you can use QuickBooks payments. Now, for those of you that don't know me, I am a QuickBooks Online specialist. I absolutely love QuickBooks Online as a financial management system for our customers. And QuickBooks Payment is a method of payment that we use with our customers and in our office also. We issue an invoice, we email it out to our customer, and we give our customer the option to pay directly from that email using their credit card information. We don't have the issues of having these credit cards on file, the possibility of the information being stolen, and being held accountable if it is. It is completely in the hands of our customer. It gives them another option and another way for them to pay their invoices to us. And in turn, if you were our customer and you choose to use QuickBooks Payments, this would give you an opportunity to do the same thing. Another option for you to consider is pre-authorized payment plans for services. So if you have a service-based business and your services are value priced or menu priced, then you can offer pre-authorized payment plans. So a large job, for example, you can say to your customer, sure, Mr. Customer, this is a $4,000 job. I have no problems with taking $500 for the next 8 months out of your bank account. Pre-authorized payment, making it a little easier for your customer, offering that diversity, and it gets the money into your account. Lastly, or not lastly, another option is Pluto. This is an online integration that integrates with online financial management systems, or FMSs. Pluto not only helps you collect payments from the people that owe you money, it allows you or helps you pay your own bills online. Absolutely fantastic tool. Not only can I pay my rent, my hydro bill, my gas bill using Pluto, I can send out invoices through Pluto to my customers, and they have the opportunity or the option to pay that particular bill from their bank account. So if I want to use credit cards for my customers, we use QuickBooks Payments. And if they don't use QuickBooks Payments and don't pay the invoice that way, I can send it out through Pluto, and now they can pay it using cash from their bank. Different options, and it allows the customer the flexibility to pay their bill, and I get my money. But that's not the only method of payment. You perhaps could choose PayPal. PayPal is an international company, so if you decided to offer services in different countries, you could have a PayPal account in British pounds, US dollars, Canadian dollars, and I'm sure there's many more. But PayPal is another way to do it, and again, gets the money into your account. Now, each and every one of these options, there is a fee. Not one of them are free, unfortunately, but everybody deserves to make money in their business, and they do offer a service. But the fee that you're paying is going to be negligible in not collecting these monies at all, and your business possibly not thriving. By reducing the barrier to help your customers get payment to you, you're offering so many options. It allows your customer to pay by their preferred method, whichever method that happens to be, and that builds a trust between you and your customer. It helps eliminate the legitimate risk of customers not being able to pay you because you don't have the method of payment available to them that they prefer. And it also eliminates excuses. Oh, I'm sorry, I can't pay that because I don't have a credit card. Oh, great. Let me send you your account. Let me send you your invoice through Pluto, and you can pay it directly from your bank account. And best of all, you can always take cash, right? Our third tip is changing your payment cycles. So let's talk about this just for a minute. When we issue an invoice to our customers, there's so many different variations we can choose. The normal is pay upon receipt, and in some businesses, that's the only way that you're going to get cash into your cash register. And in some cases, that's fantastic. But for some of us, construction industry, service-based industry, the electricians in our world, we issue an invoice and we wait for payment. In that case, the cycle on our invoice is pretty important. It's normally pay in 30 days. Sometimes it's due upon receipt, but your payment cycles actually do dictate when it is you're possibly going to get paid. So if you're due upon receipt or due immediately, generally speaking, you can be paid anywhere from the first day to the 7 days after that invoice has been issued. If your payment cycle is 1 week, pay within 7 days, you're going to get payment somewhere between the first day and the 14th day, usually. That's normal. And again, for 2 weeks, this can be payment anywhere between the first day or 2 to 3 weeks. It can take significant amounts of time as you go further and further out for payment terms. So the idea here is taking the time to actually shorten the terms. So if your norm is pay me within 30 days, shorten it. Don't feel bad about that. 75% of invoices today are requested to be paid within 2 weeks' time. And that is not a bad thing. Shortening your terms to even due upon receipt puts the money into your coffers. These people came to you and asked you to do a service. You are entitled to payment. You're not the bank, and nor should you loan them tax-free this money for a period of time. You did a service, pay me for that service. But be willing to negotiate, because sometimes if the job is a big job, being flexible and getting the payment in parts or in pre-authorized monthly payments will still bring the cash flow in. You just need to be a little flexible on that. So if the bill's a little bigger, offer pre-authorized payments or offer monthly payment plans. Consider offering them a discount if they choose to pay the bill in full within a set period of time. Otherwise, you can spread the payment out over a number of months and charge a small fee because of the hassle of having to collect that. It's another way of getting some passive income into your account. My fourth tip is invoice immediately. I know this seems a no-brainer, but if you're really busy, this is something that doesn't happen. I've seen, and in this one certain circumstance, I've been waiting for a bill for 2 months. They haven't billed me, and I've asked for the bill so that I can pay them. If you did the work, you've got to be billing your customer, right? It doesn't matter how short your payment terms are. If you don't have a bill in their hand, they can't pay you. They can't pay you, you have no money going in the coffers. No money going in the coffers, you have no way to pay your own debt. So don't put off the invoicing. If you don't invoice, you get no payment. You can even invoice today using FMS from your phone. QBO, again, is a prime example. I can invoice sitting in my truck after doing a job, send the invoice to the customer, and as I'm backing out of the driveway, if I have QuickBooks payments, I can be getting paid. Simple as that. And here's the best part. I didn't have to do any accounting to get that into my bank account because it's automatically being deposited. I didn't have to run to the bank and do a deposit. It's being reconciled or matched or in my accounting system, so I'm not paying my bookkeeper to do that or myself. This is the beauty of using online systems. But let's talk about the invoice process just for a minute, because this is one of the places where people actually fall down sometimes. And it's just because sometimes they don't understand the steps. Set up a billing schedule. Like I said, I'm still waiting, and it's 2 months later for a bill from a supplier. If you sit down and you have a regular schedule, then it's easier for you to get it done. So say maybe it's every Friday afternoon. Sit down, bill all your customers. But invoice more often. Maybe instead of invoicing once a week, you need to be doing it 3 times a week, Monday, Wednesday, Friday. This happens. It's sitting down and creating a schedule that works for you and your business to make sure the money is coming in consistently and regularly. Have you ever considered automating your invoices? This is key. Here in our office, I do not issue an invoice. I have it set up to go out automatically. We have utilized automation to make sure that our invoices are going out to our customers and they in turn are able to pay us on a regular basis. We also use PAP plans and we use QuickBooks payments, but that's neither here nor there. With the automation, again, I'm saving money when it comes to my bookkeeping, I'm saving time, and I'm saving employees time so that I'm not using them to do what I call data entry. You can use invoice templates. So maybe you're not using an online system. I respect that. Use a template. Use Excel. Google Sheets is free. Go into Google Sheets, set up a template so that you have all of the information you need on that invoice, your logo, the date of service, all of the columns add up with your HST on the bottom, your terms in a box, letting your customer know what your terms are, a detailed description of the work that you did. You can be typing this right out on your phone as you're sitting in your truck before you even leave, and you can email that to your customer. Easy peasy, lemon squeezy. Invoice templates if you're not using an online accounting platform like QuickBooks Online. Track your time and your materials. You do not know how many times I see this happen when people come to me at the end of the year to have their taxes done or on a monthly basis. They have not tracked the time or their materials for a specific job in a way that allows them to bill it back to the customer. Those records are key to you not losing money on a specific job that you're doing. I'm not saying everyone doesn't do this well. It's just sometimes it doesn't happen. And unfortunately, that can be detrimental to you and your business. That is step number 4, my 4th tip. My 5th tip is spend frugally. I know, simple, right? We're in business. We're not here to waste money. But unfortunately, the difference between knowing what is essential spending and what is wants versus needs, that's different. So essential, what would be considered essential? If you have employees, you have to pay for employee benefits, CPP, EI, salary remittances, insurance for your business. You need to have that. Life insurance on yourself in case you, are not here and your business needs to continue on. Processing fees, well, that's just a fact of life, unfortunately. Paying your rent, these are essential spendings. Software tools, is that essential spending when you're first starting out or when you're getting into business? In my case, because I am a service-based business, software is my biggest expense. And I suffer with something that I call squirrel. Ooh, look, a shiny new toy. And I get all excited. I've done my due diligence, I've researched it, and I just have to have it. But was it essential? No, it wasn't. I had to have it. So look at what you're spending and look at how you're spending. The less you spend on your business, and I mean, spending for essential things completely, absolutely needs to be done. But spending frivolously, when you're first starting out, that tightens your cash flow. Something that we do to help eliminate that or help our customers curb their spending is help them to develop a budget and to help them stick with it. It helps them, budget for those hidden and unexpected costs by creating slush funds for them so that they have that little bit of wiggle room every month. Building in that emergency fund. I don't care if it's $50 a month. Putting that aside and knowing it's there, off and away in case I need it. It's that cushion. And when you're creating that budget, my favorite, and it really truly is as simple as this, overestimate your expenses. So I'm looking at it's just like doing it for your house. Overestimate your monthly expenses. Underestimate the income coming in and try to find a middle ground. That's what budgeting is. This allows you to live within, quote unquote, your means, unlike our government, and allows you to be able to go profitably ahead. So if your income is actually more, that's gravy for you. You have more money in the bank because you've actually overestimated those expenses. Either way, you're allowing a cushion of cash to sit in your bank account that you can then invest in either paying off your debt, being able to pay those bills, pay those employees, and not worry about your rent at the end of the month. Oh, and remember, review, review, review. And review it on a monthly basis. Believe it or not, it takes 5 minutes once you get into the habit of it and you're looking at your business on a monthly basis and not day to day. This is the difference between success and just existing. But when you create that budget and that plan, taking the time to sit down and do it allows you to do so much more. That budget will allow you to seek additional funding if you need it. You're going to know when your lean periods are and when your flush periods are. speaking about myself again and the business that I'm in, our flush period or our Christmas period is between January and April. It's tax season. Everybody's coming in to get their taxes done. This gives us all of these extra funds, and we budget for that. Because for the rest of the year, we have our regular monthly clients that need their bookkeeping done, or we have some stragglers for taxes, but we have the money that we need to do what we need to do every month. That extra money at Christmas time or tax season allows us to invest in our business, and it's our cash cushion. We leave it in the bank and we use it as we need to over the course of the rest of the year. That allows us some breathing room. But by creating that budget and knowing when your flush times are and your lean times are, you'll know, based on what you see, when you need to be able to cut expenses and how far into the future you need to start looking at that. It also allows you time to see in those lean periods so that you can talk to your suppliers and say, look, you know what? This is September and I'm really tight right now. Is it possible for me to not pay you in 30 days, but pay you in 45 to extend the payment terms? Most suppliers are more than willing to do so because they don't want to lose your business either, right? Creating that budget allows you to plan for your future. Our sixth tip today is charging interest. Charge interest, you say? Well, it's otherwise known as late payment fees. So let's look at this scenario for a minute. I have an invoice for a customer for $1,000. And I say to the customer, my payment terms are 2% in 15 days, net in 30. And if you don't pay me in 30 days, I'm going to charge you 2% interest. So let's look at this. The customer has options. They can pay me in 15 days, and they can pay me $980 instead of $1,000. Okay, that's only $20, but people want to save $20. They don't pay me in 15 days. Well, unfortunately, now the customer has an option. They need to be paying me $1,000 in the next 30 days. But now it's the 31st day, and I still haven't received my money. I've done the job. I want my cash. Now, because I have to follow up, I'm going to charge you a late payment fee, and that's going to be 2% of the overdue amount. So now I'm expecting a collection of $1,020. It's a late payment fee. Is it a penalty? Some people feel that it is, but you knew the terms when you purchased from me as a customer. And my expectations is that we have a contract and you are going to pay it within that period of time. You haven't paid it. Therefore, I've loaned you this money for you to live off of or do other business with. I'm entitled to an interest on that. You call it what you will, but that to me is what late payment fees are. But the biggest thing about this is you need to discuss this policy with your customers prior to them even purchasing from you. You don't want them to be absolutely side-ranged when you say to them, oh, well, it's 31 days, you owe me 2%. Well, I didn't know that. Discuss it with them. It only takes a minute. And then when you're discussing that policy with them, discuss the terms. Let them know exactly how much it is that you charge for overdue invoicing. Don't scrimp on it. Be very diligent. Include this fee right in your contract. You don't have a contract? That's fine. Maybe you need to start drafting one up for your business. I know in my case, we call them engagement letters. And these engagement letters specifically state in one paragraph that this is the fee that we charge on all overdue invoices. No questions. We also clearly and prominently display this fee on all of our invoices. It's built into our template in QuickBooks Online and goes out to all of our customers. When you pay late, there's a 2% fee per month. This is something that you can build into your template. It only takes a minute and it is worth the time. I know these are extra steps, but the extra steps will hopefully not only increase your cash flow within the 30 days, but possibly gain you a passive income that you can use if your customer chooses not to pay you on time. Lastly, my seventh tip for you is chase your money. Now, I know this seems, again, rather simplistic, But believe it or not, some people have a problem with this part of doing business. So if you invoice and you want your money, you have to chase it sometimes for certain customers. What I say to yourself was, did you really earn it? Then you deserve it. And if that's the case, then sometimes you need to chase for it. And when it comes to chasing your money, it really is all about the follow-up to get the money into your bank account for you to use. If you don't want to follow up, and I understand that because some people are quite uncomfortable doing that, set up prepayment arrangements at the time of giving the customer the invoice. That will eliminate that particular problem. Some people feel really uncomfortable asking for the money that they've earned. One of the ways you can do it is by emailing your customer if you want to avoid actually sitting down with them on a regular basis. And if that doesn't work, call them. Or in today's society, today's day and age, you can text them. But you're having a hard time collecting. There are steps to this. And this is something that I want to take time to sit down and talk about. Because there is a series of steps you can follow. And any of these can be switched around depending on your needs or eliminated completely depending on what type of business you're actually in. Send a request letter. Hey, John, you owe me $100. Send him and it doesn't even have to be a letter in this day and age. Send him a text, send him an email. Either way, send it. You're not going to get any response. Follow up, following up, follow up with a past due notice. Now, maybe past due notices are not your thing. Perhaps you want to go right into a statement of account. And what that does is list all of the outstanding invoices, and God forbid should someone owe you a significant number of them, but let's say they do. For instance, a fleet, you can sit there and say, all of the following invoices are due. Here's your statement of account, payment is due. Still not getting action? Make a phone call. Call them up and ask them when you can expect payment. And if you're still not getting money, unfortunately, now you may have to look at what I call ramifications, or saying to your customer, unfortunately, I will not be able to continue providing you services for free, because that's really what you're doing, right? Cut them off until payment is received. And this happens, the phone company will cut you off. Why are you any different? At the end of the day, they're still not paying you. This is when we start to have to look to professionals to help you collect those funds. Now, there's a number of businesses out there that specialize in debt collection, and they're all over our vast country. And their fees can range anywhere from 20% of the collected amount to 50% of the collected amount, or even a monthly charge just to have them on your retainer. Either way, depending on how much a person owes you or a company owes you, this may be worth investing in. And lastly, unfortunately, again, depending on the size of the debt, you may have to call in the lawyers. Now, I have never taken it to this level. What I have done is I've written off the debt at this point because obviously I will not be collecting it. But then again, I don't have customers that owe me more than a couple of $1,000s at a time. So this is pretty much the end of my 7 tips and tricks. And our next step is for me to ask if there are any questions. Now, because as I said at the beginning of this webinar, I neglected to record this last night, so I apologize for that. But Dan Rathburn had some really interesting questions from joining us. And one of them was, when it came to their customers coming to them and they work with fleets, they give the invoice to the gentleman in the truck and it doesn't get to the AP department. So one of the things that I mentioned was that as a business owner, they can get the email address for the accounts payable department and they can send it directly to the main office who actually issues the payment. So now you're completely excluding the middleman, and the middleman is not being held accountable for getting that information to the people who actually cut the checks. For us that want to get paid, cut the middleman out if you possibly can. There was a number of other questions, and if you guys have, questions with respect to accounts payable, with respect to accounts receivable, but specifically using automation to get cash into your bank account, this is something that I'd love to have a chat with you. It's easy to do. It takes 30 minutes of your time. Let's have a chat. In the meantime, this has been our entire webinar, and it has been an absolute pleasure meeting with all of you. I do hope that you've learned something from this, and I am going to provide you with my contact details. So if you need to reach out to me in any way, I'd love to hear from you. You can reach me on all social media platforms. That can be Facebook, Twitter, Instagram, and LinkedIn, of course. You have our phone number here for our office, my direct email, and of course, our website. I want to take this time to say thank you for joining us, and I hope that you found this to be a valuable webinar. We look forward to seeing you next month when we talk about automation and artificial intelligence. Thanks so much. Bye now.